The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 20 minutes to go until the start of trading, and you got markets picking things up in positive territory. Quite the acceleration yesterday on the news that President Trump considering firing Powell. He refutes that story. Markets finish higher, and we are basically at pre-market session highs right now. Strong retail sales, 0.6% for the month. Let's jump over it to give give some context to the move that we have this morning. U.S. retail sales surge in broad advance, 10 of the 13 categories trading higher. And yeah, the value of retail sales, not adjusted for inflation, these numbers are. How about increasing 0.6%? Yeah, the market was looking for a rise of just 0.1%. You talk about a reversal of where we were in May. We had retail sales down almost 1%. As I mentioned, 10 of the 13 categories posting increases, surprisingly fueled by motor vehicle sales, which climbed after back-to-back declines. Now, what's so interesting here is your motor vehicle sales rising at the same time that was one of the areas of the CPI bringing down some of the costs there. And yeah, you want a healthy consumer? Well, retail sales, strong numbers, man. All right, so that's the context of the move this morning. We jump around, and there's your acceleration from markets on that 8:30 number. S&P futures up by about 10 points. You get the NASDAQ 100 right now, right where we were at about 3 a.m. You trade higher on that 8:30 volatility. You see that 23,100. So we're about 40 points above there. NASDAQ 100 up by 0.3%. The Dow up by 0.1%, 44,489. And you have the Russell barely in the green as well, positive by just 1 point. But the Russell charging higher by 10 points since that 8:30 a.m. number. Bitcoin down $1,600 at 118,000 crude right now. Little volatility this morning as well. We were just trading above 67. Right now we're up by 21 pennies at 66.59 on crude. And yeah, with that move, we got some action. Yields, the dollar, and therefore gold. We come into that number at about 110.12. And remarkably, you're spiking to higher price, lower yield on that number, which would not be intuitive. If the market marches on, then in theory, it should be more difficult to cut if we have a strong economy, right? That is the fear. The economy is so strong, you don't need to cut. If we cut, there will be inflation. If the economy is strong, nonetheless, you have the 10-year at 4.45. Okay, you put that thing on a 15-minute, and all things considered, not a big reaction yesterday to the potential news. And you wonder whether President Trump was putting that out as a feeler to see how the market would react. If he did so, there was not a huge reaction. There was a reaction in the dollar, that's for sure, but not in yields. This morning, though, we had the dollar hitting 98.95, a little bit of dollar strength, and gold trading lower by $37. Stay tuned, folks. We're coming back. We'll take a look at Pepsi with their numbers, Netflix with their earnings tonight. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We take a look at Pepsi, and you talk about a run, man. You know, Kevin Hinks, he would always come on this program. You can check him out on the Schwab Network, 12 noon, Fast Market, every day with Kevin Hinks. And he was a market maker, folks, okay? And he used to be in the Pepsi pit. And one of the things he used to talk about is historically, right, the move in this equity is not much when you factor in. You take a look at the options last night, okay, and options... yeah, for the July 18th, so these are the close of tomorrow. Yeah, and so these are going to be set with a price of $135.35. Okay, if you go back in, the at-the-money put in the call last night, it was a $5 move, which percentage-wise is probably more than usual in this equity, because you're usually not getting a lot. But as you can see, this morning we're up about $8, so more than the expected move to the upside. And Pepsi beat estimates even as U.S. demand falls is the headline there. They come in at $212 earnings versus $203 revenue with a beat as well by almost $500 million. $22.73 billion versus $22.27 billion. Net income, $1.26 billion. Whew. Now, down from $3.8 billion, 3.08, excuse me. Net sales rising. Worldwide volume falling 1.5% for its food and was flat for its drinks. That's a worrisome trend, man. Right? Worldwide volume going down almost 2%. You round it one way or the other, 1.5 goes up to 2. Domestic drink segment reported its volume falling 2% in the quarter. The only thing that's going up is actually Pepsi. And Pepsi Zero. Double-digit volume growth. Well, that's probably a good trend in general. You know, soda's probably one of the worst things that you can drink. Eat, period. Sugar water, right? Hey, all things in moderation. Nothing wrong with a snack. But boy, it is a treat and a half, and I would just rather have a treat and a half somewhere else than drink some sugar water. But it's tasty, it's sugar. Now, that's a good transition to Trump saying Coca-Cola agrees to use real cane sugar. Hey, listen, if you're going to do it, do the real thing, right? High fructose corn syrup, if you're going to get it, man, get the real stuff. And yeah, Archer Daniels Midland, the company that provides so much of that high fructose corn syrup, how's that for a low volatility on that news? No more high fructose corn syrup. Archer Daniel Midland says, what? Now, we take a look at a longer-term chart of this equity. You talk about some problems, man. The market marches forward as this equity just pulls back. Look at where we've gone in the last 2 years, 2.5 years. From 100 to 40 as the market's plowed higher. You take a look at the weekly, a double top in 2022, and we take a longer-term look than that. And yeah, you're talking about bouncing at prices that we saw in 2006. Hoo-wee. And pressure's going to be on them yet again to the downside. And it's amazing. Coke didn't explicitly agree to the change. Well, something tells me that they're going to have to agree to it now, right? More details on new innovative offerings within our Coca-Cola product range will be shared soon. Now, I wonder how much it would cost. That's the issue, right? If they could do it easily, they'd do it. It's the cost issue. How much is it going to cost for real cane sugar versus that high fructose corn syrup that's taken over everything? Nonetheless, you got a little volatility today. We see Pepsi higher. You jump over to Coca-Cola, and they're slightly higher as well. That's a monthly. We take a look at the weekly. These charts are quite something when you're trading into this huge bar that we have from the volatility in April. Like, you check out Coca-Cola. Okay, that was some real selling last week. You did it on volume. Coca-Cola trades lower on 95 million shares. That's the most volume we've done since that April 7th acceleration. So we got a little bit of selling. And even on a strong number from Pepsi, Coke barely catches a bid. We're up by about 30 pennies this morning for Coke. All right, Lucid. What is their symbol? LCID. So they're teaming up with Uber, and boy, the market likes this. You're popping by as high as 370, and the deal comes out there that Uber's investing $300 million. And this is going to be the case that makes it so difficult for Tesla. They are not going to be the only player in town, man. And yes, they will be a player, okay? But Uber inks a 6-year robo-taxi deal with Lucid. So imagine, they invest $300 million. They get a 6-year deal. I mean, can you imagine what the world's going to be like in 2031? No. Of course you can't. Nobody can. Probably have flying taxis by the time this deal is done. To deploy more than 20,000 robo-taxis over the next 6 years as demand for driverless cars kicks into high gear. And they can do it with somebody else as well. You know, there's no reason why they have to be the only one, right? As that Uber teams up with here. Nuro will build the self-driving technology that would be used by Lucid to supply Uber at least 20,000 robo-taxis. So Nuro is an autonomous vehicle startup, and they have a partnership with the likes of them. So Nuro is backed by Google and, of course, SoftBank. Love how everybody's, it's one intertwined web, right? So you got Uber teaming up with Lucid and teaming up with Nuro. Nuro's backed by Google and SoftBank, right? The partnership with Lucid and Nuro follows Uber's alliance with Google's Waymo. And there you go, right? So Nuro's backed by Google. You see the complex relationships that are forming between these tech companies, between Uber, between the car companies that go in the likes, but nonetheless, man, that is a pop. Lucid comes in at about $2.29, and we're going to be trading up 75 pennies. So what is that? 230, 23 pennies. Yeah, you're talking about a 25% pop right now. Volume waning a bit coming into the opening bell, but I imagine this thing will get some volatility on the opening bell, that's for sure. And Uber, a little bit of volatility as well, with the market and Uber's going to open about 25 cents higher. Now, Uber, you're talking about a company right now. What are we pushing? Fundamentals, valuation-wise, $300 million, $190 billion company. Whew. That's amazing, these tech companies, man. So $300 million. You think about how little that investment is, right? To procure 20,000 vehicles over 6 years. $300 million, nothing to this company. All right, we jump around to some of the big dogs. Amazon shares slightly in the green. Apple shares this morning trading higher by about 60 pennies. You jump over to NVIDIA, the biggest dog out there. We're going to open near record territory. Not near. We're going to open at record territory. NVIDIA up another $25 billion in market cap overnight. We'll come back for the opening bell, folks. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. We have markets open, and you're looking at the S&P's flat right now, trading at 63.03. We are as high as above 63.15, and yeah, we got a little bit of selling to kick off. Jump over to the NASDAQ 100, positive by 24 points right now, 23,107. Dow slightly in the red with the Russell slightly in the red. We jump over to yields. So interesting action on those retail sales numbers, as we are actually trading up to higher price and lower yield with the 10-year at 4.45. You jump over the dollar right now. Now, quite a resurgent on the refutal of the Powell news in terms of we're right back up to where we were. right, as of yesterday morning. Now, gold, though, okay, gold actually below where we were at that point, right? Gold on those retail sales numbers dropping dramatically. You drop from almost $33.35 down to $33.14 right now, and gold is off $38. You take a look at the daily, and we just continue to bump up against this 1-to-1 line. Look where we were at the beginning of yesterday, right? That line's at about $33.64, and you're just basically bumping against that line for exactly 3 months. You got up there around April 17th. It is July 17th, remarkably. You jump over to silver right now. Silver peaks out. A couple big days last week. We peak out at $39.57. We pulled back a bit, but we got some nice volume at the highs there on silver. That is a strong chart. You jump over to copper right now. Copper. We get the volatility around the tariffs last week. And same thing. Just pulling back a little bit on lighter volume. All right. We check in on Pepsi on their numbers. Pepsi up by 6.7% and continuing to run. Look at this thing catching a bid on the open. And as I mentioned, these equities, and I say these equities, Pepsi, not exactly a growth company, but they've been dealing with some woes in the market, liking what they're seeing. And only a $5 expected move in Pepsi, but you're moving right now more than 7%, and you're moving on the open up by almost $10. Coca-Cola experiencing some of that gain now, up by 1.1%. It was surprising Coca-Cola is only up by a few pennies. If Pepsi deals with so much of Frito-Lay, right? All that snacks versus soda, etc. Nonetheless, Coke up by 1% this morning. We jump over to some retails. Walmart flat this morning. Amazon shares flat as well. Let's take a look at tech. Microsoft up by 0.3%. Nvidia gives it back slightly, but that's going to be a record open for that equity. Look at this run. It's not stopping, baby. Yeah, that is a record open for that equity, and we trade lower on the open. We're down by 0.4%. And Lucid catching a bid up by 26%. Now you jump over to Lucid. This company is a $9 billion company. Remarkable. You're only talking about a $300 million investment. Now, that deal can always change over the scope of 6 years. You can't even imagine where we're going to be in 6 years. Can't even imagine. Jump over to Tesla. Up by 0.4% right now. We check in on some of the banks with their earnings. Bank of America, slightly in the red by 0.8% right now. JP Morgan, the big dog, down by 0.2. Goldman, slightly in the red. Morgan Stanley's flat this morning as you have the NASDAQ 100 actually rolling over a bit on the open. Yeah, we just traded down almost 100 points. All right, we see what other headlines we got out here. So Google, yeah, this went out yesterday, but they're going to be talking about their new Pixel hardware August 20th as they compete, of course, with the iPhone, but they're going to have the Pixel 10, Pixel 10 Pro, and a couple other items there. Yeah, and they're competing with Samsung. How about a $2,000 phone? You know, I find myself, I'm still dealing with, I still have a 12 Pro Max Apple. It's great. It works fantastic. At some point, I'm going to need to upgrade it when they make those AI features available for some of the better phones. It's not there quite yet. But the idea of spending $1,200 on a phone on a usual cycle, we'll see how they do when they turn that into a need for their AI capabilities, which is just not there right now. All right. Yeah, you talk about the Fed. What else we got pulled up here? We talked about Pepsi. All right, let's take a look at Netflix. So you have Netflix earnings after the bell. Right now, you're up 0.2%. We take a look at Netflix, and right now, Netflix has an expected move. Ready for this? $77 on their earnings. Okay. A better way, an easier way from my mind to process it is realistically you're paying $80 for the options that expire tomorrow at the end of the day, okay? Of the $80 you're paying in either direction, okay, you pull this up, we're trading at $12.50 right now, we go to an at-the-money put and a call, and you're talking about $40 about, okay? So you want to make a directional trade in Netflix, and you're talking about a $40 $8 call or put that you have to make up to break even. That is where you get the $80 expected move in either direction. You just want to buy volatility. You buy a put at the money. You buy a call at the money. It moves $80 in either direction. And then you start making money is where you break even. So think about that, right? If you do that and you go $80 in either direction, you're talking about you need either $12.70 to $13.30. You are break even to lose money. There's a $160 range is how far this equity can move in. It's a large move, right? Now, it's a $1,253 stock. So percentage-wise, $80. What are we talking about? 6.7% move expected. Now, let's take a look at Netflix, though. Because we got some selling off the top here, okay? Netflix, you sell off on July 1st. 5 million shares. We haven't come close to that level, and that is actually the highest volume selling that Netflix has outside of one day, going all the way back more than 2 months. Okay, that is some selling off the top. That's going to be a little bit of an area of resistance, and in general, when you have an equity trade from 162 to 1341, I find myself looking for a healthy pullback on a strong equity, and a healthy pullback on this equity of a 382, folks, can bring you down to $900. Jump over to the fundamentals of this equity. $532 billion market cap. How many shares we got outstanding? 425 million shares outstanding. Take a look at the weekly volume. Yeah, you look at this volume, right? You accelerate on April 21st. You reach a high of 1,100. You know, I love Uber longer term, but I feel like at this valuation, with where the volume is, you know, maybe we get a consolidation. Maybe we get a little bit of a pullback in Uber right now. Netflix. Because longer term, yeah, they're crushing the world. There's only one Netflix, and they're going to make an ungodly amount of money with selling ads. That's it. They've taken things over, and the revenue stream on the ads that they are showing is going to blow away anything they've done with user subscriptions. With that said, we just went from $160 to $13.41. You got volume waning since that acceleration on April 21st, and we have some selling last week. And we come into earnings tonight, but yeah, about an $80 move priced in. And I'll take a look at one more possible trade for Netflix when we come right back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, folks, we take a look at Netflix. So taking a look at Netflix right now, we got the markets back to positive territory. S&P's up by 12 right now. I'm going to take a look at a couple example trades just to show you some of the trades that you can make, folks. And this is not advice to make these trades. It's a demonstration of if you have a belief, okay? And I'm not making this trade right now, but I just gave you the chart. You know, I said, okay, we got a little bit of selling here. Let's say you're bearish. Let's say you think it's going to be difficult right now to climb higher with the run we've had. And that's your opinion. I think that's a reasonable opinion right now. Okay? There's a couple trades you can make. Now, we have a decent amount of volatility priced in. First thing you could do is say, you know what? I'm not sure we're going to trade lower. Because like I said, they're going to make boatloads of money in the future. Okay? But maybe we just need to digest some of these gains, right? We got a little bit of selling here. We haven't had real buying since that acceleration above the February highs in April. You'd make that move. Okay? And we trade up to 11.06 on that move. Let's just say one trade, and not let's just say, one trade you can make here, okay, is you say, okay, I'm going to sell a credit call spread. So the play here is you have some volatility coming into earnings, and what you do is you sell somebody else calls above the market, okay? But I'm going to cap how much I can lose here. So what I do is as I sell a 1280 call, market's trading at 1253, I'm giving myself about $30 buffer to the upside. I'm going to sell. The calls are on the left here. I'm going to sell that call at about $51.60. And then I'm going to say if I'm wrong, okay, excuse me, 1280. Yeah, above the market. I'm getting $27.80. But here's the thing. I don't want to be uncapped. I'm not going to sell a naked call. Never sell a naked call, folks. Netflix could come out and somehow say that they're going to use AI and it's going to drop their production costs overnight by 85%. The stock will go to 2,000, right? Never sell a naked call, okay? I'm going to cap that by buying back the 1,300 call, okay? Which therefore caps my losses. So what I do is I sell the 1280 call at about $28. I buy the 1,300 call. I create a range of about $20, okay? And for that range, I take in $7 credit. Now, I have exposure of $20 though. So my risk there, if you put this on a risk profile, is I'm actually risking almost 2-to-1. Okay? If we break above 1,300 on that trade, and I love how Thinkorswim sets these up so well visually, okay? You can see that what happens, if I trade above 1,300, that's my max loss, and my max loss is the $20 range minus the credit I take in, which is $7. My max profit is anywhere below $12.80. Okay, so you got about $30 above where the stock's trading at right now. We're trading at $12.53, $27 to be exact, and you are risking more than you stand to make. You need to be profitable more often than not on this trade. Okay, now here's the thing: when this equity opens tomorrow, though, there will still be, and don't pay attention to this green one yet. We're just doing the red. We're going to combine them in a moment in both. When this market opens tomorrow, okay, if we're anywhere near this range, there'll still be some pricing, as in that obviously there's a probability it could expire at the end of tomorrow, which is when these options expire, okay, within the money. Now, that is a trade that profits if you expect Netflix to stay under $12.80. But let's say you say to yourself, we're going to take that trade off, we're going to redo it, okay? Now let's say you say, you know what? $80 is not that big of a volatility move right now. I think that volatility should be priced higher. And what I'm going to do is I'm going to be the one paying volatility, and I want to buy a debit put spread, okay? So I'm going to buy a put slightly below the market because I think Netflix is going to go down on earnings tomorrow. I'm going to buy a 12.10 put. About $45 below the market is where I'm going to start making anything back. Well, that put alone, okay, to show you how much volatility is in these equities, you buy a 12.10 put, folks, it's going to cost you $20. You got to break down to $11.90 just to break even. That's a $65 move just to break even. Okay, but let's say you think it's real. And then what you're going to do is you're going to say, you know what, though? I don't think this thing's going to really tank. I'm just looking for potentially an $80 to $85 move, the expected move. Okay, something like that by tomorrow. So then what I'm going to do is I'm going to sell the 1170 put, okay, which caps my losses, but it reduces my initial investment because I recoup $8.55. So you're buying the 1210 put at $19, but guess what? You go to 1170 and you're getting back $8. So it only costs you about $10. Now, here's the cool part about this trade. Yes, this is going to be a loser more often than not, folks, okay? Because as you can see, you start gaining exposure at 1210. We look at the risk profile of this equity now, and it's reverse, as in now your max loss is $1,000, but your max profit is $3,000. You're risking one to make three, okay? You need to get a move of $85 to the downside to cap that out. Your break even is at about $1,200, which is the 1210, and then you have to make back your debit on that trade. Okay? Now, let's combine the both of these trades. And what you're going to do is you're going to create a credit above the market that's going to help you fund your debit below the market. Okay? So first you put on the trade, and this is basically a four-legged trade, but any four-legged trade, not any, but most can be broken down to two separate two-legged trades. Okay? So you make the first trade, which is you think that Netflix, no way it's going above $12.80 tonight. Okay, maybe you get a little lift, but expectations are sky high, man. Okay, so you're going to be the one risking about $13 on this trade to get the $7 credit. Then what you're going to say is, you know what I'm going to do, though? I think that's going to be right, and then I'm going to take my $7 credit, and I'm going to apply that to a put spread below the market. Okay? Because I think that, yeah, it's not going above $12.80, but I actually think there's a decent chance that this thing trades down about the expected move of $80. What you do there is, okay, is you give up your profit when you break even, essentially, right? Because on the first trade, you were going to profit that $7 per a pair. Well, you've applied that credit to your trade. Well, the cool part is, though, is that instead of losing $10 anywhere up until $12.11, what you've done now is you've created almost a break-even area, okay? You lose the difference between these two, which is going to be $3.30 about, okay? But you do that anywhere from $12.80 down to $12.11. But boy, if you get a move where you're making, yeah, $3,600. And the real risk, though, is they both go wrong on this trade. Okay, and again, this is not a recommendation, but just to understand, you know, and if you don't understand this, folks, you can come back, you can watch the archives. All right, I encourage you to get a Thinkorswim demo account and try it out for yourself. You can do this all, and the visual representation is great, and then it just allows you to understand the risk reward. Because you got Netflix, man. Now, your risk and maximum here, $2,300. Your max profit is $3,600. You have a wide break-even range. And then you have a profit area that begins to become profitable at about $12.07 in that trade. All right, folks, there's Netflix. Netflix up by $2. Earnings after the bell. Markets in the green. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&P accelerating higher. Markets catching a bid, man. They're buying the dip, and we are at session highs right now, up by 17 points at 63.21. NASDAQ 100 up by 74 points. How about the Dow up 206 right now, and the Russell up by a full percentage point. We check in on yields. The 10-year higher price, lower yield right now, and even in the face of that, right back to where we were, 98.75. Dollar strength with those higher numbers on yield on an overall basis, and gold right now down about $35. All right, we were giving you poker updates, folks, and they got a champion, and it is the gentleman that had the big lead, Michael Mizrachi. So pretty remarkable feat. He wins this tournament with almost 10,000 players. He won the $50,000 Players Championship, which was one of the marquee events every year. He takes home $10 million. Now, here's the cool part. You need a little luck, folks. You need a little luck, okay? And what's cool is, so on this hand here, right, check this out. My producer put this up. He had like 1.5, and this gentleman made a video of this, okay? At this point, he just won that hand. Let me say, go back. For $3 million, he was down to like 1.5 big blinds, okay? early on when they had like 27 people left was the number. And then he wins, many, many chips to get over 500 million, okay? But check out these odds. We like math, okay? You talk about consecutive numbers. We've talked about this before. Check out, he won 10 all-ins consecutively. Okay, it is a skill game, but there's a lot of luck involved in everything, folks, okay? Especially when you're playing cards for millions. All of those percentages he won consecutively. Now, even though he got it in good many times, he got it in as an underdog many times, and he also won 10 consecutive hands. The odds of doing that, folks, 0.014%. Put it on the chart. 0.14%. Percent. 1 in 1,000. But guess what? It came in, he got it done, $10 million. New World Series of Poker champion. We had a woman at the main event final table for the first time in 30 years. So maybe a good thing for poker. Another little poker boom. We'll see. Nonetheless, 10 consecutive hands in a row. That's what you got to do to win a 10,000 person tournament. Nonetheless, markets in the green, folks. Basil Chapman, he's coming up next with the Tiger Technicians Hour, folks. Steve Rhodes with the Trader's Edge. Fast market at 12. Larry at 1. We'll see you at 3, folks.